Ladies and gentlemen, good day and welcome to the Premier Energies Q2FY25 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Thank you, Darwin. Good evening. On behalf of ICICI Securities, I welcome you all to the first call of Premier Energy Limited post the successful listing in September 24. Today, we have with us from the management, Mr. Chiranjeev Saluja, Managing Director, Mr. Abhishek Lunkar, Non-Executive Director, and Mr. N.K. Khandelwal, CFO. We'll begin with the opening remarks from the management, followed by Q&A. Thank you, and over to you, sir.
Thank you, Mohit. Am I audible?
Sir, you are audible. You may proceed.
Okay, thank you. So good evening, everyone, and thank you all for joining us today. This is a special moment for Premier Energies as we are addressing our first analyst call post-listing. I am Chiranjeev Saluja, Managing Director of Premier Energies, and it is an honor to present our quarterly results in this new chapter of our journey. I am joined today by my colleagues N.K. Khandelwal, Group CFO, and Abhishek Lunkar, Non-Executive Director. It's a proud moment for us to share with all of you that Premier Energies has clocked another quarter of outstanding operational and financial performance, posting excellent revenue and earnings growth. For the Q2 FY25, company has achieved a revenue of 1553.59 crores as against 701.81 crores in Q2 FY24, marking a 121.4% year-on-year increase. This growth is driven by robust demand from domestic market, reflecting solar energy's growing importance in the energy mix. Our exports for this quarter were 2.82% of the quarterly revenue. The EBITDA for the quarter stood at 406.95 crores compared to 107.02 crores in Q2 FY24, exhibiting a growth of 280.2%. The EBITDA margin improved from 15.25% in Q2 FY24 to 26.19% in Q2 FY25. This improvement highlights our focus on operational excellence, cost optimization, and our ability to efficiently ramp up capacity and meet the rising demand. The profit after tax for the quarter surged to INR 205.95 crores, making a remarkable 289.6% year-on-year growth compared to 52.86 crore in the same period last year. PAT margin has improved from 7.53% in Q2 FY24 to 13.26% in Q2 FY25. The proceeds from our IPO have significantly strengthened our balance sheet. Our net debt to EBITDA ratio was 5.5 in H1 FY24, and today we are net cash positive. As we discuss our performance, it is equally important to touch upon our future growth plans and the broader outlook of the solar sector. We are executing a 1 gigawatt TOPCon cell line expansion, which will be completed by Q4 FY25. Further leveraging the opportunities for backward integration, we are planning an investment into wafer manufacturing facility of 2 gigawatt, which is targeted to be commissioned by FY26. We are also pleased to announce today our foray into aluminum frame manufacturing business, by setting up a 36,000 metric ton per annum facility for captive consumption. This project would require a capex of 230 crores, wherein the equity portion of 25% will be funded through internal accruals. This investment into aluminum frame manufacturing will improve our EBITDA margin by 100 to 150 basis points. We are very well placed to benefit from solar power demand outlook, and we are highly confident of achieving timely project execution and turnaround by leveraging our core strengths and delivering value-enhancing investments to our stakeholders. I look forward to sharing and discussing our progress in detail with all of you in the years to come. Thank you, and we are now open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, Chiranjeev. Am I audible?
Yes, you are.
Yeah. Congratulations on a good set of numbers. If we just wanted to first start off, given the strong performance in 1H, is there any sort of revenue and EBITDA margin guidance that you would want to give for the full year?
So, it's not that we cannot give any guidance, but what we can tell you is that, being one of the top companies in the solar manufacturing space in India, we will continue to maintain leadership position, and as the industry grows, we will be in the top tier of the growth.
Sure. Maybe just wanted to sort of understand this sharp margin improvement that we've kind of seen. Even considering the fact that we've seen a sharp increase in other expenses. Anything that you want to call out why other expenses have seen a sharp jump QOQ when revenues are sort of being flat?
So margin improvement has happened because lines have stabilized and they are working on better utilization compared to last year. And last year our cell line was not commissioned. It had got commissioned only in the Q3 of last year. And then also efficiency in procurement because of scale what we have. So all these have contributed for the margin improvement.
Sure. Just anything on the other expense? We've seen a sharp jump QOQ with, for a flat revenue base. It's gone up to 194 crores from about 131 crores.
So that's as per our policy and provisions. As the revenue is growing, we have a provision which is there for warranty because modules are sold on a 25 to 30 year warranty. So because if you look at the revenues, they've almost doubled compared to last year. So that's how that provision has gone up.
Sure. Maybe just wanted to sort of check out in terms of any volume numbers that you want to indicate in terms of production of cell and module that you did. I know we already have the revenue numbers in the presentation, but any broad range of how much did we produce, cell and module?
So we generally track and share revenue numbers and not, both, not volume and revenue because of confidentiality reasons. So I think revenue is what would give you an indicator on volumes.
Sure. And just wanted to sort of understand because, if we assume sort of very strong EBITDA margins of maybe 35-40% on cell, even at module level, we may be doing, north of 20%. So is there sort of like a healthy mix of DCR also in the module revenue number?
Yes, so we do have a healthy mix of DCR because we are one of the very few 2 or 3 players who are making DCR cells in India. And if you talk of the EBITDA margins, the operating EBITDA margins have increased by about 3.3%. And then this is again because of operational efficiency, and also the mix of DCR and non-DCR remains almost constant every quarter, but there is a healthy mix.
Sure. And maybe just one final question from my end. I think just wanted to understand our U.S. expansion policy, given the, change in government in U.S., and, does this further strengthen our thought process of expanding on the ground presence in the U.S., or, how are you looking at, if there is any potential IRA rollback or any of that, how would you consider your investments today? Exports is a very small part, I understand, but obviously we are also looking at certain expansions in the U.S.
Yeah. So our exports have been not very significant for a long time now. It's simply because of the demand for the domestic market. There is a huge domestic market demand, and we are committed to the requirements in the Indian market. On U.S. expansion, we are a little bit of a wait and watch, looking at the political developments. We have signed, an MOU and announced that we'll be setting up a gigawatt of facility along with our U.S. partner, that's Heliene. Generally, as I had even told earlier in my, investor meetings, that to construct a cell line takes about 2 to 3 years. We are just starting off now, and we will be looking at how developments happen. We are one of the few companies in solar manufacturing in India which is not dependent on the U.S. market.
Yes, sir. I think those are my questions, and best of luck for future products.
Thank you.
Thank you. Ladies and gentlemen, you are requested to please limit your questions to 2 questions per participant. If you have follow-up questions, you may rejoin the queue. We have the next question from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Yeah, good evening. So I want to understand if the margins going forward in backward integration. So where would you see by the year end?
It's our plan to maintain similar margins than what they are today, and according to us, we continue to maintain these margins because the demand is very robust. We are looking at a little bit of softening the margins only after about 2 to 3 years.
Okay. And as per this module capacity, as of now we have 4.13 gigawatt. Out of which, could you please break up technology wise, like TOPCon how much and monocrystalline how much?
Yeah. So our lines are, apart from the 250 megawatt, that's 0.25 gigawatt of polycrystalline line, everything else is neutral. We can do mono-PERC, TOPCon, HJT, anything what we want.
I mean, there is no need of any investment in the technology. Go for TOPCon or HJT.
No. At the moment, almost 70 to 80% of our production is TOPCon. To move to HJT, the spend on capex is insignificant. It is just changing some jigs and fixtures, so it's not material at all. But I'm talking about module line.
Okay, understood. So, if you by year end we are going to commission again 1 gigawatt cell facility also. So, how much it could contribute to the margins? Like you mentioned that aluminum frame will contribute 1 to 1.5%.
So for aluminum, we have already shared the improvement in margin. TOPCon is a technology which is just coming into India, and it is the first time even we are foraying into TOPCon. So I think I will refrain from giving, margin improvement on TOPCon.
Okay. I see that most of the revenue.
We request you to please rejoin the queue for follow-up questions.
Yeah, sure.
Thank you. The next question comes from the line of Vipraw Srivastava from Phillip Capital. Please go ahead.
Hi, I'm audible, right?
Yes, sir, you are audible.
Okay. So just first question on your margins. Obviously, you're making margin which is very higher than your peers, and I understand that is because of the DCR cells which you are selling. But as is being anticipated that by year end, India should have around 10 to 12 gigawatt of cells coming online from various players, then that monopoly which you have currently goes away. So how do you see margin progressing? Because if more solar cell capacity comes online, then the DCR compliant modules which are selling at very high elevation right now might fall gradually.
Yes. So we had given this in all our investor presentations that, the demand is very robust, and as more cell lines come up and as competition catches up, there would be a softening of EBITDA margins from where they are today. And this would take at least about 2 to 3 years as cell lines come up. But it also depends on how demand increases in US and in India. So it's very difficult to give an answer to that today.
Oh, fair enough, sir. Fair enough. So secondly, currently, obviously, since ALMM and cells is still some time away, government is indicating 2026. So, I mean, what benefit you have compared to China, because cells sourced from China are still cheap. So apart from DCR, there is no regulatory requirement to use Indian-made cells. What's your pitch to players if you're pitching your cells?
So these are two different markets. What is happening in China is an oversupply situation. They are bleeding. You can look at the financials of Chinese companies. They are suffering huge losses when you see their quarter-on-quarter results. So it's it's a very tricky question to compare, what China prices are today, because when you look at China prices over the last 1.5 years, they are today selling below even material costs because of survival. So there are two different markets in India. And, even if you talk of Chinese companies making solar cells outside China, we are able to compete with them. It's only in China that they are able to, dump to other countries. So it's very difficult to compare these two markets.
Because in the non-DCR market, someone who is sourcing the cell from China will have an advantage. Indian module manufacturer sourcing a cell from China will have an advantage, right, in the non-DCR market?
Yes, so we also have a non-DCR market, we do import cells from China for our IPP customers, and that's a significant portion of our revenue. So there is no competition between these two markets. When an IPP customer wants solar panels from us with Chinese cells, we do import and give them solar modules which are ALMM compliant. Now, once ALCM gets imposed, which the government has announced that they will impose with a future date, then there will be no difference, because then everything will become DCR.
Right, and last question, sir.
We request you to please rejoin the queue if you have further questions.
Sure.
The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, am I audible?
Yes, you are.
Yes, sir. Thank you and congratulations on the great set of numbers, sir. Sir, my first question would be on, there is some anti-dumping duty petition filed by the Indian solar firms. Do we have any update on that, as on where this thing is right now?
It's still in the nascent stage. It's just been filed a couple of days ago, so there's no development, significant update on that as of today.
Okay. And do we expect any timeline or something that we may expect some developments from here on?
It's difficult to say. It may take a couple of months, and it depends. There are a lot of stakeholders involved, so we really cannot give the outcome of this.
Okay. All right. And sir, the second question would be, sir, what percentage of revenue comes from government projects, or do we do something that we get revenues from government sector?
So in the government sector, we've got two kind of one is like institutional, a PSU, but if you government as in cushion projects, then our revenue in H1 has been around 10.3%.
From government?
Yes.
Okay. And sir, how are we, targeting to, increase our revenue from government? Are we targeting?
It depends. I mean, it depends on how the tenders come up, what the payment terms are. So it's it all depends.
Mm-hmm. Got it.
Thank
and
you.
Sir,
sir,
all right.
Please rejoin. Yes, thank you. We have the next question from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hi, thank you so much for taking my question. I had a couple of questions on the expansion that you had mentioned in the geology. So the 4 gigawatt cell and module line, have you given out orders for the expansion yet?
So the update on the 4 gigawatt, the order on the 4 gigawatt project is that the land had already been acquired. We have finished with the land leveling and the boundary wall. We have already signed the agreements with the consultant who is going to be doing the design and engineering. And the tool finalization process is ongoing. As on today, we have not released the orders for the tools.
All right. And again, so the timeline that we had mentioned earlier for the setup of this, we are well in order to achieve that timeline.
Yes, we are well on track.
All right. All right. So my second question would be on the we were supposed to a JV with in the US where we would set up to produce there. How is that progressing?
Sorry, you'll have to repeat your question, maybe. Your voice was breaking.
So we were also talking about a JV in the US where we would essentially produce modules in the US.
Yes. So the JV in the US is to produce solar cells. That is our JV partner in the US is a module manufacturer, manufacturing modules for the last 14 years in the US. We are progressing well, but as of now, we are in a wait and watch situation. Because of the political developments in the US, we want to wait to understand the new regime's stand on the IRA benefits. And so as of now, we are just focusing on design and identifying the sites. So we will be updating more on this as we progress.
All right. Thank you so much for my question.
Thank you. The next question comes from the line of Naman Jain from Kotak Institutional Equities. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, so congratulations on a great set of numbers. Actually, you were going through your presentation, and one of the things which you have shared is the module pricing, right? So Mono PERC is currently trading at 19 cents, while TOPCon is trading at 11 cents. Any reason for this? Is it because of DCR and its weighted average, or is there some other reason or a difference?
So I think those were prices given in the China market. Let me just look at that. As of now in India, the TOPCon module prices are around 15.5 to 16 cents for non-DCR, and DCR is around 23 to 24 cents.
Okay. And any other reason for the gap? Is this because of China, is it?
You're talking about the drop in prices in China? Yes.
No, just the gap. The drop is understandable.
Sorry, yes. The gap is because China is leading. They are selling below cost, and we are able to get full advantage of that. Our customers in India, the IPPs, are getting full advantage of cheaper solar cells from China because of overcapacity in China, and that's why we're able to give them modules at 15.5, 16 cents.
Got it. Thank you. That's it from my side.
Thank you. The next question comes from the line of Deepak Saha from KR Chokshi Shares and Securities. Please go ahead.
Hi, am I audible?
Yes, you're audible.
Yes.
So my question is, on the wafer side, the capacity expansion that we are doing. So can you please highlight your plans for polysilicon? What are your plans exactly? Are we going to, what are the dynamics there? Do we have Indian suppliers for 16 grade silicon, or are we looking to import it and further process it for ingots? If you can highlight that particular part on the wafer side.
Sure. So we had announced even in our DRHP and RHP that we have entered into a agreement with a Taiwanese company to set up wafer manufacturing. The equipment for this has already been ordered, and we expect commissioning sometime in FY26 for this 2 gigawatt wafering facility. And we will also get into backward integration to ingot subsequently once this line stabilizes. We don't have any plans to get into polysilicon manufacturing.
So currently,
we will be sourcing our polysilicon from outside India, and as and when polysilicon is available in India under the PLI scheme, if we get polysilicon in India, we would buy it in India. But if we don't, we would import polysilicon.
So even without having polysilicon, will we still be able to gain better margin with the wafer backward integration that we are doing, right?
Yeah, even without getting into polysilicon, wafer and ingot itself will improve our margins.
Okay. And the last part is I missed it. Pardon me, for that. On the US side, did you say your plans to set up the JV or the plant in US is currently on hold because of policy uncertainty?
No, it's not on hold. We're just going a little slow to understand how the new regime in the US, to get more clarity on their views on clean energy transition. So it's not on hold. As I told, any case, it takes about 2.5, 3 years to set up a cell line. So it's progressing, but we will just look at how things develop on the US side with the speculations and kind of rumors on how the focus will be on clean energy.
No, my question is to be more specific. Is it just because of the change in government or because I'm just trying to understand rest of the things with the company, the particular company you are trying to set up the JV with, no change on that part, right? That remains intact. It's just the policy uncertainty and those things are impacting your decision, right?
Yes, there is no change in our plans with our JV partner. We have an excellent relationship with them. The whole point of going a little slow is only to understand how the new regime in US decides on the clean energy transition. There's no other reason.
Okay. Thank you, sir. I'll call back on that. Thank you.
Thank you. The next question is from the line of Harshil Sethia from Renaissance Investments. Please go ahead.
Sir, can you outline the total capex that you have planned for the cell module and the wafer manufacturing facility?
So for the 1 gigawatt cell line, the capex investment is about 670 crores. For the 4 plus 4 gigawatt, which is coming from the IPO raise, is 3,300 crores. And on the wafer, it's about 175 crores.
And for the aluminum manufacturing?
230 crores.
Okay. So, and that would be done in phases. So, how much would be done in FY25?
So, FY25, we will be finishing the 1 gigawatt of popcorn, which is the 670 crores. The aluminum would come in FY26, and everything else will come in FY27.
Okay.
Thank you.
Understood.
The next question is from the line of Nikhil Abhyankar from UTI Mutual Fund. Please go ahead.
Thank you, sir. So I just had a query on the order book position that you have given in the PPT. So this 3860 megawatt order book that you have mentioned, is it only for module or is it module plus cell? Can you just clarify?
So it is both put together.
It is cell plus module. Can you just give us a split if you can, sir?
The split is already shown in the investor presentation. In the revenue mix, it's about 3,943 crores for modules and 1,915 crores for cell and 375 crores for EPC.
Sure. And so this pipeline of 4250 megawatt, given the bidding activity that we have seen in India, isn't it a bit less? So how exactly do you how exactly do you target your projects for which you will be bidding?
Yeah, so we don't want, the bidding activity is quite robust. The demand is very high, but we don't want to take, looking at the volatility in the market, we don't take very long-term kind of bets on orders. So these are orders which we look, at finalizing and closing in the next 6 to 8 months.
Okay, it is only that activity. Sure, sir. That's all from us.
Thank you. The next question is from the line of Ashish Upganlawar from InvestQ PMS. Please go ahead.
Yeah, thank you so much. Sir, on the question that was asked on your stance for the US capacity, is it possible to give some more insights whether current IRA, can the new government basically scrap it?
So we have not heard anything concrete that there is going to be any change in the IRA. are kind of rumors and market news and speculation based on statements given by the various political parties when they were campaigning. So after the government is in place now, we have to wait and watch. We have to see what kind of stand they take. As of now, there is no change.
Thank you. The next question is from the line of Anand from Pound Intra Finance. Please go ahead.
Hi. Thank you for taking my question. I have two questions. Could you please provide an overview of the major raw materials required for a solar module and their respective contributions as percentages to say a 1 gigawatt module? So let's just say solar cells, solar glass, aluminum frames. What would require as a percentage?
Sorry, your voice was breaking. Could you repeat that?
Sorry. Could you please provide me an overview of the major raw materials required for a solar module and their respective contributions as percentages to a 1 gigawatt module? So let's just say solar cells, solar glass, aluminum frame. How much would that account for as a cost?
So this keeps changing depending on the price for solar cells. As of today, when you talk of non-DCR modules being sold at 15.5, 16 cents, the contribution for cells is close to about 40%. And then the BOM, that is the balance of material, is the rest of the contribution which comes in. In terms of, an overall mix of DCR, non-DCR, we sell, our material margin is ranging between 35 to 38%.
Okay. And just for my
I request you to please rejoin the queue for follow-up questions. Thank you. The next question is from the line of Anup from T Systems. Please go ahead.
Sorry, my question is asked by earlier users, so I can skip. Yeah. Thank you.
Thank you. We will proceed to the next question, which will be from the line of Sarang Joglekar from Vimana Capital. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to understand, is there any, regional hold in the industry? For example, you have factory in Telangana. So does that mean that you have better hold over market in that region and, other people who have in factories in North, they control the market there? Is there any kind of thing?
No, there is nothing like any significance that, because we are based in Telangana, we have a stronger market share in this region. We sell all across India. We sell our solar cells to over 25 module manufacturers in India. So we sell all across India. There's no specific regional mix.
Okay. And so can you give a distribution of how much of your modules are sold directly to EPC or through government tenders or through distributors?
So we have about maximum sales are, in domestic terms, it is about 41%, and to IPPs is 32%. We do OEM for customers, that is about 12.2%, and export is about 3.9%. So that's the mix. So IPP customers
said how much?
IPP is the large power plant developers.
Okay, good. Yeah, thanks. That's it from my side.
Thank you. The next question is from the line of Vipraw Srivastava from Phillip Capital. Please go ahead.
I'm audible, right?
Yes, sir, you're audible.
Just wanted to understand, annually, what is the DCR market in terms of gigawatts in India annually?
So this is increasing now with the PM Surya Ghar Muft Bijli Yojana and the KUSUM scheme which was announced. In fact, one of the components of the KUSUM scheme was converted to DCR from 1st of April 24. So the demand is anywhere between, as on today, between 10 to 12 gigawatts, and this is growing. The pipeline is huge. So when you talk of pipeline, there is the KUSUM scheme, which has a huge pipeline, and then you have the CPSU scheme, you have the Surya Ghar Muft Bijli Yojana. So if you look at the Kusum scheme itself, only about 5 lakh pumps have been installed as against the government's target of 50 lakh pumps by FY26. And if you talk of the feeder level and the grid connect, that's about 34.8 gigawatt of installation which has to be done as a target under the component C. In the Surya Ghar Muft Bijli Yojana, that's about 25 to 30 gigawatt to be done over 3 years. So this demand is growing. I would estimate it's between 10 to 15 gigawatts as of today, but it's growing.
Sir, since you brought Kusum scheme, so on those lines, so basically government has an active dashboard which you can actually track the pumps being installed. So even the government has sanctioned a lot of tenders for these pumps, but actual installation by farmers is not happening. Farmers are not ready to spend money on this. So how do you see this progressing? Because even the government is giving tenders and Shakti pumps installing those pumps, you are getting the money. But if farmers on the ground are not installing those pumps, then maybe you could face a working capital issue in future. Is that a possibility?
So I think the government has seen this slow progress which has been happening in the last couple of years, and they have come out with efficient mechanism like in the PM Surya Ghar Muft Bijli scheme. They have come up with direct subsidy transfer to the individual or the family which is installing the rooftop, and they have minimized documentation. You could very easily get your subsidy and very minimal documentation required. So there were processes involved in disbursing the subsidy. Similar issue was also in the Kusum scheme, which has now been simplified with SECI and the government getting very proactive. So we feel that the demand is going to grow from here.
And so lastly, that the numbers for Muft Bijli Yojana, can you please repeat? What was the target in 3 years?
About 30 gigawatt. We're talking about 10 million households. Even if you take an average of a very conservative average of everybody installing a 3 kilowatt system, that's about 30 gigawatt.
Fair enough. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Yes, sir. Thanks for the opportunity. Could you please give some breakup of DCR and non-DCR, sir, in this current quarter?
So, could you repeat? What do you mean, breakup of?
DCR revenue and non-DCR revenue.
No, we don't share revenue of DCR and non-DCR in our revenue mix. It's a total revenue mix which we share.
Okay. So we are not exporting anything to the other countries, but do you see any opportunity going forward for the exports, as we heard from other competitors that export margins are a little better than the domestic margins?
We are looking at various export opportunities, but at the moment there is such a robust demand in India that we are catering to the domestic demand because of the unprecedented volumes which are required locally. And in our investor presentation, we have also shared the revenue mix of solar cell and module. I think you can get some idea from that.
Yeah, sure, sir. So under this aluminum frame capex, so we're going to purchase aluminum from the smelter and we'll do that process here, or we're running any smelting also?
No, we will be procuring the billets and then doing the extrusion and anodizing and then the fabrication.
Okay, sir. Thanks. That's all from my side. Thank you.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Thanks again for the opportunity, sir. Just one question is on the interest cost. Sir, what will be the interest cost for this financial year and what is the debt as on date in the company?
So the interest cost for the company right now on the long-term liabilities is around 9.25% per annum. And for the short-term liabilities, working capital funds, it's in the range of about 8.5%. Mm-hmm. And for the total long-term debt and short-term debt as on 30th September, long-term debts are 863 crores, short-term debts are 385 crores, 148 crores is the total debt. Against that, we have cash in hand of about 1,520 crores, including the IPO proceeds. The net cash on hand is about 233 crores against the IPO proceeds, and regular cash of about 40 crores liquidity to 270 crores the total cash. Right.
Okay. And this will be roughly around what, 180, 190 crores for full year? The interest cost? Hello?
What's your question?
Sir, the full year interest cost for this financial year.
Full year
money. Yeah. Around 180 to 200 crores.
100 crores. All right. Thank you so much.
Thank you. The next question is from the line of Deepak Saha from KR Choksey Shares and Securities. Please go ahead.
Hi, sir. Am I audible?
You are audible, sir. You may proceed.
Okay, just wanted to understand once again. I missed the numbers on the industry. I mean, the customer split. If you can just highlight that particular part. How much is your IPP and other players that you are supplying to? OEMs and IPP in terms of the models that you are producing.
So I think I already answered this question. You're talking about the percentage of revenue to the IPPs, right?
Right.
Yeah, 32% is our mix in H1 24-25. 32% is to IPPs, 41% is to other domestic customers, and 12% is to OEM customers. 10.3 is government customers, and 3.9 is exports.
Okay. Okay, what was your order book in terms of gigawatts? If you can say in Q1, what was your order book?
Like Q1 or Q2? You're talking about Q1 or Q2?
Q1 FY25, what was your order book?
Yeah, Q1 the order book was 5,700 crores, and Q2 we have already shared in the investor presentation. That's about
broadly, I'm asking in terms of gigawatt, if you can say in Q1, what was your order book in terms of gigawatt, both for solar cell and module?
Sir, sorry to interrupt, but your line sounds muffled. Request you to use the speaker mode.
Yeah. Okay, just a second. Yeah. Is it better now?
This is slightly better, sir. Please go ahead.
Okay, I'm asking in Q1, you shared the absolute number. If possible, can you share in terms of gigawatt, what was your order book?
Yeah. So I think Q1 numbers were given in the RHP, the megawatt and the order book. Q2 numbers is 3,860, that's 3.86 gigawatts, 6,233 crores.
Okay. Fine. I mean, we looked into it, so we couldn't get the Q1 numbers in terms of gigawatt in the order book. The absolute number was there, but in terms of gigawatt, that number was probably, I couldn't find. So that is why I was asking.
Okay, then allow us to come back to you on this, please.
Fine. Thank you.
Thank you. The next question is from the line of Ketan Dean from Avendus Spark. Please go ahead.
Hello. Hi, sir. So my question is on what would be the realizations on sales in Indian market, and who would be the typical customers for this?
So when you talk of cells, you're talking about Indian manufactured cells, right?
Yes, the Indian manufacturer.
Yeah. So it ranges depending on the order volume between 13 to 15 cents per watt.
Okay. And who would be the typical customers, like the module manufacturers? Is it a B2B? Is it a B2B market only?
Yeah, so about 15-20% of our cells are going into export, and about 30% are going to B2B, different module manufacturers, and the rest goes into own consumption. For the DCR model.
Understood. Yeah, understood. Thank you.
Thank you. The next question is from the line of Deval Shah from Mirae. Please go ahead.
Yeah. Hi, sir. Thank you so much for the opportunity. My first question is on 36,000 metric ton aluminum frame capacity. What kind of module requirements will this capacity suffice?
So as of now, it will suffice our module requirement, which is close to about 3.5 gigawatts.
Understood. And sir, my second question was, when we say once the wafer capacity commissions, this will result in 100-120 basis point margin improvement. So does this imply that we will be able to manufacture wafers that prices less than 1.5 to 2 cents per watt at which we are currently importing?
Margin improvement was for aluminum, not for wafers.
Understood. So, sir, on the wafer side, are we getting any benefits under PLI, and will we be able to, or will it result in margin improvement once the wafer capacity is commissioned? So, will our wafer procurement cost be less than 1.5 to 2 cents per watt?
So today, as I told you, China is bleeding. It's very difficult to compare today's China price with what our margins would be when we start our wafer manufacturing. We are getting into wafer manufacturing because we want to get into backward integration, and there is a very robust demand from customers in the US for a clean solar supply chain. There are customers in the US whom we sell solar cells to who want non-Chinese wafers. It will again be similar to the DCR, non-DCR kind of a model wherein when we are selling to entities in India, we need not use our own wafers. And looking at the support from the government of India, the roadmap is clear. They are talking about ALMNC now, and they want to also look at ALMNW as we go forward.
Understood.
And, talking about the PLI, we are not under PLI. We are under the MSIPS and the SIPS scheme and the local incentives given by the Telangana government. We do not have any subsidy under PLI.
Understood, sir. Thank you so much.
Thank you. The next question is from the line of Harshal Sethia from Renaissance Investments. Please go ahead. Harshal Sethia, your line has been unmuted. You may proceed with your question. There's no response.
Hello.
Participant.
Am I audible?
Yes, go ahead.
Sir, what I want to understand is whenever a customer orders, do they give an integrate? So, do they have the option to say that I want the cell from so and so player and you make the module, or he just has to get an integrated cell from you only?
It depends on the customer. If it's an IPP customer, they could actually decide on getting the solar cells and tell us to do the rest of the BOM. And if it's a DCR customer, then it would be our in-house cell and we would make the module.
So, can I say that 100% of our cell capacity is captively consumed?
Sorry, 100% of our cell capacity
is captively consumed for our own modules only?
No. So we supply solar cells to about 25 module manufacturers in India. We also export cells to the US. So what goes into our captive consumption is around 50%.
Okay. Understand. And only the the cells which are sold outside are being specified for that 448 crores of revenue in Q.
Yes.
Okay. Understood. Thank you, sir.
Thank you. The next question is from the line of Aditya Jawar from AK Investments. Please go ahead.
Yeah. Thanks for the opportunity. This is regarding the cell market. So in couple of quarters, there will be large sums of module cell manufacturing companies are going live. And how do you see the competition here Is it easy to stabilize the line because they are coming up with, I guess, 5 gigawatt of cell capacity? So how this will affect Premier Energies as a company? That is my first question. And the second question is, I see you putting a lot of capacities till FY28, and the prices might be unstable at FY28. How do you see in terms of growth, and what are your revenue and margin guidance in coming 3 years? These are my 3 questions. Thanks.
So talking about capacities which are coming into India, we have given this update even earlier that it is not easy to set up cell line. If you look at the companies which have been setting up cell line or announced setting up cell line, and if you look at how much time it's taking them to even commission the lines and then to stabilize these lines is not easy. We are one of the, I would say, just 1 or 2 companies in India which have almost 14 years of experience in cell manufacturing and at scale. So, according to us, it will take time for people to set up cell manufacturing. It's a process-driven industry. It's not easy. And with the announcements being made, we see that looking at the demand, there's going to be a very clear demand, and margins are going to be stable for at least 2.5, 3 years. Post that, what is going to be a differentiator between Premier and other companies is the knowledge, the operational efficiency, the kind of deep and rich experience we have. And then if you look at what Government of India is talking about, ALCM, if that comes in, which the government is quite positive about, then the entire market would need 40 to 50 gigawatt of cells. So if ALCM comes in, then we are looking at this whole story going for at least 45 years with very stable margins.
And what about revenue and margins for next 3 years? What is your internal targets?
So our internal target is to be, among the top 1 or 2 companies growing at the same rate and having similar margins of what the industry would be delivering. So we would like to maintain leadership position and have similar kind of growth story which the industry has.
But I don't see you putting a lot of capacity in the modules, right? I mean, industry is going at 20 to 25 as a single player, but we are planning for 8 gigawatts, so there is a lot of gap there in solar modules. But I know you are good at solar cell, which is commendable. But and how we would be in number. But in revenue and margin, do you have any thoughts? Any concrete number can you share if you have internal targets? That would be helpful.
Yeah, you would pardon me, I'd like to refrain from any future guidance.
Okay, sir. Wish you all the best. Thanks.
Thank you.
The next question is from the line of Ashish Upganlawar from InvestQ PMS. Please go ahead.
Yeah, sir, just wanted to understand the margin profile of an integrated facility. As you go backward, how the margins move. If you're a module manufacturer with your still maybe, and when you're doing cell plus module and then wafers plus cell plus module, just for understanding, we need to know.
Yeah, I think our results are up there. What kind of margins an integrated player is making, and there are other listed players in pure play module. I'm sure you can compare what the advantage is to be an integrated player.
Okay. So would that be maybe module would be 16-17% EBITDA at that scale, and integrated would make it, say, 25% plus. Is that a fair assumption?
Yes, I think what is shown in pure play module listed players, and our numbers are there. I think it's ballpark around there.
Okay. Fine, sir. Thank you.
Thank you. The next question is from the line of Bhavani from Kizuna Research. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, my question was with respect to this aluminum frame manufacturing. So, will that be whole for captive consumption or also for providing to other companies?
As of now, what we are, going to implement in phase 1 and phase 2 is going to be captive. We don't have plans to sell to anybody else.
So, sir, what kind of margin improvement will it bring, this captive consumption?
About 100 to 150 basis points in EBITDA.
100 to 150. And sir, could you name any other company like any other competitors which are also into this aluminum frame manufacturing?
There have been quite a few announcements made by module manufacturers, which is, I think, available in public domain.
Okay, sir. Thank you.
Thank you. The next question comes from the line of Sushrut Gokhale from Caprice Investments. Please go ahead.
Sir, as you were replying to a previous participant that due to the increased volatility, we are not going into too much long-term contracts. So this current order book of, say, 6,200 crores, so is it safe to assume that this is executable over next 6-8 months, or what is our typical order execution timeline?
So this particular order of 6,000 crores order execution is going to be about around 10 months to 12 months.
Okay. And also, is there any seasonality like H2 strong?
No, we don't have any seasonality as such.
Okay. Thank you.
Thank you. The next question comes from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Hi. Just want to know how much is the capex in terms of, monetary, how much capex are we doing, and how are we going to fund it?
So I think all the capex which we are doing, apart from the ammonia which we have announced today, was all in the RHP. The 1 gigawatt upon cell line, which is coming up in Q2FY25, is 670 crores with 75% of debt and 25 equity. The plus 4 gigawatt at 3,200 crores of project cost, again, is about 66% debt, and the rest is come from the IPO proceeds. The 230 aluminum will be again 75-25 debt to equity.
Okay. And now we have mentioned that we have an order book of around 6,000 crores, and our run rate every quarter is around 1,500 crores. So we have approximately a year of orders. Is the company comfortable with this, or in future are we looking at 1.5 or 2 years of orders? Is that the kind of, what is the comfort level for the company?
No, so there is also a pipeline, and with the new cell line getting commissioned in March next year, we will be closing further orders in the next 3 to 4 months.
Okay. And if I can squeeze in a question about your US expansion. With change in government, with Donald Trump coming into this, and everybody knows, how his outlook towards solar is. So, do you see any risks, potential risks, or is it covered?
So we really do not know. It's a wait and watch situation. There have been statements made earlier, but I think most of them were during the political rallies. And if you look at the change in statement on the EV cars, what was made earlier and what is made now, there has been a total turnaround. And if you look at the module manufacturing facilities which have come up in the US, around 30 gigawatt of manufacturing has come up. Majority of them have come up in the red states. So, you will see that it's really difficult for them to turn around on policies, but we just want to be making a wait and watch kind of situation. And we are not really dependent on the US market in any case. But as it progresses, we will take steps.
How much capex have we already done in there?
Nothing. That's what I said. It's a wait and watch. We have already signed agreement, and capex spend has not happened. We are just looking at identifying location for the plant.
Okay, great. Thank you so much.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the call over to the management for closing comments. Over to you, sir.
Thank you so much. I'd like to thank all the analysts and the companies which joined in and the valuable time for today's call. And we, as Premier, we look forward to having more fruitful interactions with all of you. And I look forward to more calls in the future.
Thank you.
Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us. You may now disconnect your line.